China, clearly it's been working. When does this party end?
Valuations have increased immensely since when we heavily got involved in China a year ago. PE ratios were trading in the high single digits in August of last year. Now they're trading at 25. If we stripped out a lot of the state-owned enterprises, valuations could be as high as 40 on a PE for the Shanghai Composite. We're getting close. We're very cautious about the market continuing, although I hate to say this, but I'm hesitant at saying bubble yet. I still think we do have more to go. The momentum from Chinese buyers is immense.
Have you taken any positions off?
We have. We've trimmed our exposure a great deal, and we are a hedge fund that actually hedges. We're doing far more than just speculating on the market flying higher, so we trade a lot of relative value. Last year, it was obvious, most obvious to be long China. It was a no-brainer to be long in fourth quarter. But right now, I think it's not for the faint of heart, and I think upside prices are far more limited than they once were.
Chris, how pervasive do you think the risks are, the kinds of which we saw in the trading of Hanergy and Golden stocks?
Well, I think the risks are anything related to China right now is starting to get very, very risky because of the kind of run-up we've seen. We've seen the overall market run up close to 140% over the last year and over 50% in the Shanghai market this year. So I think anything that you do touch is getting risky.
Right, but there's a difference between a 5 and 10% pullback on concern over valuations and a plunge of 40% in the space of a day.
Correct. If we look at China, look at the last bull market of 2007. The market ran up. Many of the stocks that we were looking at in August of 2007 doubled in a period of 1 to 2 months. That's the type of moves that can and will occur in an emerging market such as China. So I think that that's when I mentioned caution, that we're not quite at bull market territory yet. Or sorry, bubble market territory yet, but I think we're approaching that. I think that if we saw the Shanghai Composite up at levels of 6,000, which would be all-time highs, then we would start looking at bubbles. The valuation at 7% growth in the market, I think there still is some room to go.
Are there any specific areas, though, when you think, when you are trimming within China, within the region, what are you most concerned about?
We're most concerned about retail buying slowing down. And so far what we're seeing now is that students, taxi drivers, barbers, the common retail investors, and I say those words because it is kind of silly. It's literally everybody is speculating on the market like it's Macau, China. And there's a reason why Macau makes as much money as they do relative to Vegas, and that the Chinese like to gamble. They like to punt. They're pushing this market higher with momentum, and that still is continuing. So everybody's not quite in the market yet, but when those retail holders start to sell off, then we have to get concerned.